That's a pretty severe market reaction, at least the investors in the context of the stock. But analysts raising price targets, what is it that you think they got wrong in their reaction? The investors, I mean.
Well, first, before we sort of get into the reaction, let's talk about the quarter, because obviously this all came out of our earnings release yesterday, out of the print. I think in a year, and particularly Q4 of 2022, was a quarter where performance mattered more than anything else to the street, to investors, to the world, more rather than potential. Shopify delivered. I think we demonstrated that while commerce is moving fast, Shopify is moving much faster. On the top line, we beat. GMV was up 17% on a constant currency basis in Q4. Revenue was up was $61 million for the quarter. Revenue was up to $1.7 billion for the quarter. That's up 28% on a constant currency basis. So on the top line, we did really well. On the bottom line, we were profitable. We showed AOI of about $61 million, and more importantly, we demonstrated operating expense growth actually decelerated from Q3 to Q4. So when I think about the last two quarters, Q3 and Q4, I think Shopify has proven that we can drive improvements in our cost structure and at the same time grow revenue while still investing in critical areas. And then, we mentioned brands like Supreme, Black & Decker, Glossier, Mattel, all coming out to Shopify. So in terms of the Q4, we're very proud of how we showed up there. Now, in terms of the expectation, obviously, people didn't necessarily like the guidance. We were trying to be prudent. And frankly, this morning we woke up and we saw inflation numbers came out completely different than everyone thought. We can't affect macro trends. What we can do is make sure that we're building a durable company, that our products are beloved by the millions of merchants that use it. We're now 10% of all e-commerce in the US. We're higher in other countries, but that we're building a company that is operationally disciplined. And notwithstanding, obviously, today's stock price change, we think we are absolutely executing.
My colleague Jeffrey Morgan wrote Shopify like a film that draws critics, or a film that nobody loves, is getting bad reviews from investors, but then praise from others. That's kind of the summary here, despite the reaction. You talked about the top line, and you talked a little bit about the bottom line. I know that Toby was asked about this on the call. There was a want from the street to learn a little bit more about the roadmap for profit throughout this calendar year. Can you talk about what Shopify is doing to meet its profitability targets?
Yeah, look, we're not a company that was raised on venture capital. If you think about the 7-year period post-IPO in 2015, we were profitable 5 out of 7 years. So we're a company that actually has been profitable for a very long time, and we understand the path back. In fact, we were cash flow positive in Q3, cash flow positive in Q4, and we had AOI then. But we're also a company that takes its medicine. If you think about the layoffs that have been happening in tech the last couple of weeks, Shopify did a headcount reduction back in July of last year. So we're not a company that has been bloated like a lot of other companies have, but we're also making sure the products that we're putting out there are products that have that are important to our merchants. One metric that got missed almost entirely is our attach rate, which is now at 2.85%. The attach rate, which is effectively revenue divided by GMV, is a proxy for the usage of our products by our merchants. So remember, we have small businesses that come to Shopify. We also have a lot larger merchants that are coming to Shopify as well. I mentioned Black & Decker and Mattel and Supreme on the call yesterday. So we have all these different growth vectors, not to mention once they come into Shopify, we're not just helping them with e-commerce, we help them with physical retail. We're giving them capital. We gave out $400 million of cash advances in the quarter. We've done about $4.8 billion of cash advances total since the capital program came to be. We're doing things like audiences to help with things like return on ad spend and helping them reduce the cost of customer acquisition. Shopify is very much becoming the retail operating system. And this isn't something that we're hoping investors, trust us and you'll see in the future. We're doing that right now. And the performance, I think, was indicated by the print yesterday.
Hey, Harley, we just have about 15 seconds, but what's your assessment of the health of your user base, your customers, and also others in terms of the consumer read-through?
Well, this is where I get excited, because if you look actually at the U.S. business registrations, the last 2 years have been the highest business registrations of the last 10 years. So that's on the merchant side. On the consumer side, the consumer is strong. We had $200 billion of GMV in 2022. That's 3 times 2019. And if on Wednesday, when U.S. retail sales came out, it surged. I think it was up 3% in January. It was anticipated to be up 1.8%. So the consumer in the world is strong. Merchants are strong. And Shopify is absolutely the entrepreneurship company and the retail operating system for the future of business. And we're happy and proud of what we're doing. We'll keep doing this.